Hey, everybody. Today is Tuesday, back on our regular schedule. It is the fourth Tuesday of the year. For those of you Catholics that are familiar with going to church on Sunday, it's always the 20 something ordinary Sunday of the year. That's how they count it. Um, for those of you non-cat, and actually everyone, the 27th of January is a day of remembrance for the Holocaust. I saw a video in Facebook about We Remember. So it's important to take a moment and kind of just try to grasp the gravity of um, what that means to a lot of Jewish people, and especially older people. Their stories of how they've lost entire families, that sort of thing. So take a moment on that day. I'm I'm thrilled, and it's gonna sound bad, but I've been in this funk kind of thing, and I have a feeling it's because Alan and I haven't talked in a while. Um, Alan, for those of you that don't know, was down in the Caribbean islands. Which was, according to Alan, gorgeous. Mid 80s, ocean water was 80s. Almost makes you want to live there, don't it? Doesn't it? Just be like, okay,
Yeah.
okay, I'm done. um, I think Alan's the type of person, and I saw this with Daniel Gomez as well. Um, they're the type of people that motivate you, and they're the type of people that make you want to do better or be better, or to um, push yourself and to look forward to things. So like I said, I'm grateful to have him back. I hope he realizes how much he helps me, and kind of motivates me. Speaking of helping, I've been helping quite a few. And if you look at the bottom of my screen, this is an Android project, Android project, Android project, Android project, Android project. So I've been helping people with their apps. And the good thing about that is I started taking this Android development class. This guy's an instructor over in Denmark, and he has these videos on walkthroughs. So what that has made me do or want to do is start to look at design and color. Google has this materials class that kind of walks through different design elements, and how to make your app look better. Because I'm not a big fan of these buttons here. They're clunky. They take up a lot of room. So I think that's where and I know I've talked about adding a database and adding the ability for Alan to share his stock list, and that's still on the list, or that's still something I want to do. But I need to make this look better, because I'm the more analytical type, but as I get into this design and kind of artsy fartsy thing, this is starting to bug me more than it did when I first developed it. And speaking of the app, today was kind of an interesting day, because if you look at some of these, we have a range for Oxy of 27%. We have a range of V for 24%, XOM 27. So at like 8:45, 9 Central this morning, I looked, and most, if not all, the stocks weren't triggered. And then I noticed this opening range, and I'm like, that can't be right. But sure enough, I went to look at the charts. I think, was RTX a big one? There we go. Oh, Triple M was another one. If you look at this candle, 121 down to 85. So when I saw that, I turned on CNBC, and sure enough, they're talking about the open. And at the time, there wasn't really any confirmation, but what they speculated, and I think Alan will touch more onto the open at the New York Stock Exchange, but they have this book of trades. And if you're familiar with level 2, you can kind of see the bids and the asks. And what their task, the New York Stock Exchange is tasked with doing, is setting an open price between the bids and the asks. You kind of, get a middle ground. And what they speculate or hypothesize is that a lot of the trades did not make it into the book. So that would kind of skew. So let's say this was at 115 and you have trades up to 120 and down to 110, that would kind of put it 115 in the middle. But if these 110 trades were missing and it was like 130 and 110, that would kind of skew this towards the positive side. And I think Alan mentioned that was like 80 or so stocks that trade on the New York Stock Exchange felt this morning. So odds, those trades are invalid. Odds are they're going to be rolled back. Just as many people benefited, if you have limit orders to buy or sell, as people that got hurt by this thing. So there's no way that they meaning the board or the people that run the stock exchange, there's no way that they can let this stand or not do anything about this. So it was interesting, and for a little bit of time, people were kind of scratching their heads, up down limit orders were set, or circuit breakers were triggered to kind of halt or limit that trading until they kind of figured out what was going on. So I know Alan is in, let's see here, RTX long term. And Alan, so let me first look at Triple M, because Alan and I spent a little bit on this daily chart thinking, where is this going to go? Now, what's important to note is this level right here at the end of December, where we kind of bottomed and then kind of rose again. And if you notice, we've closed below that low right there. The next low down is down at 107-ish, 106-ish. So this will be an interesting one to watch. Are we going to, because this is such a drop, are we going to rally? Or are we going to go hit these lows of 107, 106-ish before bouncing again? So like I said, one to watch, Triple M. Alan, I think another one that reported this morning was RPX, one of the defense stocks. And Alan is long this one. And this was another one that got hit by this skew. Because there's no way that this is a true open. So Alan's bullish on this one. Like I said, they reported they're down a little bit in after hours, but I think, Alan, you said you're in next week's.
Going back to the thing. So let's go ahead and talk about today. So today was a very unique day. Even almost a little bit unusual day, because some things that were supposed to go ahead and have earnings, we don't know if they had earnings or not. We don't know if they just changed their forecast. I was in defense stocks heavily, and the reason being is because I knew that the earnings were all coming up. Lockheed Martin's next week, Tuesday. But then I saw something today that they had their earnings today.
Yeah, right.
I know it's all mixed up, because I got Lockheed Martin calls for $400 a call, which is a $4 move, and the stock is a couple $100 stock or whatever. So I'm like, that doesn't even make sense. I had I had Raytheon calls for $30 a contract. I'm like, this doesn't make any sense. So I was really confused when they announced earnings, and I'm like, you know, what is going on? And then I could not, sell my Raytheon positions quick enough because there was no people wanting to be on the other side of the trade. I'm like,
Right.
this is crazy. I mean, here the stock is up. I'm sitting in $100 calls, and this thing's up to 107. I'm like, and I can't even unload the darn thing.
Yeah, yeah, you would
But
think they're in the money, $700, so.
and the next thing I know, it goes down to $85. I'm like, what the heck? But I
Right,
didn't
yeah,
panic. I went
right,
ahead and bought more call options, and we sold at the end of the day because that's what we do. We want to be out at the end of the day. We don't want to hold. You don't know what's going to happen tomorrow. I mean, someone's going to have their earnings. Uh, Microsoft, is it going to go up or down? Well, it's up, but in the morning, don't they have another goof up on the New York Stock Exchange like they did this morning? I think you're going to see that's what gets people to panic when you see those kind of things happen.
right,
I did
exactly.
want to go into detail on this. The New York Stock Exchange, maybe we'll call it 10, 12 years ago, used to have 85% of the skin in the game that all the trades had to go through. That might even be closer to 20 years now. When I was at the New York Stock Exchange, there was a lot of talk about this because they were having a lot of trouble because at that time they were having about 27% of all trades were going through the New York Stock Exchange. However, at that time they were required to start the bid. That's all they do. They start the bid at 9:30. They have to determine what the price is. So somehow they're supposed to rely on all the information of all these other exchanges and figure out between the 5, 10 exchanges that are open at that time what the price should be to start out with. Now, Brian and I were talking earlier, and he's going to go into a little bit. He came up with a theory. And what was that theory you said that you heard about? Some things weren't lining up or something?
Yeah, so they referred to it as the book, and it was interesting because Bob Pisani on CNBC referred to the tech area as, I think, the ramp. But there's this book basically, and you think of it like a level too, like the bids and asks, all of the trade, like the limit orders, um, and some of them, some of the trades or some of the orders didn't get in that book, um, which kind of skewed the orders or skewed the price or the range basically. That's their theory. I don't think it was confirmed at that point. Um, I don't know if they really know. Um, CNBC, let's see here. Microsoft offers weak guidance. So I wouldn't be surprised if Microsoft turns red.
Yeah,
Um,
so right now, to be transparent, my positions are all defense stocks right now long. I am long Rite Aid, 5,000 contracts or 50 contracts. Um, I I find in this business, you're really going for inexpensive opportunities. So, you know, where I'm at on Rite Aid, you know, if it goes up, whatever, 50 cents, I can make 5 grand. So it's kind of like it's a risk reward thing. Um, Raytheon, I was only in the trade for $300. I mean, boy, it sure would have been nice to go ahead and if it would have held for a second minute, I probably would have made at least, whatever, 10,000 on it. So, but the reason I say that is that a lot of people make mistakes on options, and they buy these things too expensive and too close to the money. And if you do that, it's a recipe for disaster, because the thing is, this stuff moves and then you can't sell it, and then you're stuck with a huge loss. So
Right.
yeah, but this is what we saw this morning. Happens again tomorrow, I look for the stocks to drop. We were talking about MMM, which is one of my favorite stocks. I think it's getting beat up, but we were looking at a chart that Brian brought up. I could see it going down to 106, but from what I can tell, the first day it stays up, I'm going to be buying calls on it
Yeah, because
because it's so far away from the SMA.
I think we saw the 20-day SMA at 123, I think. So,
Yes, yes,
which is 10% close to
yeah, yeah,
maybe eight.
and then yeah, and this is this will be a thing to watch for Google, because Google is way past its SMA. Its SMA it should be only be trading around 89, but how it's good news to laying off 12,000 people. Is it just amazes me, because I'm looking at, if you're working at Google, you're probably at one of the highest paid engineers in the business, making 200K a year, and they just laid off 12,000 people. I mean,
Right.
can you imagine, that um I mean, and then the stock goes up like $10. I mean, usually what that means is that usually it means when you lay off people, that means that you're going to miss your earnings, and that your revenue's going down. So that used to mean that the stock goes down, but nowadays it's a good thing. But
Yeah.
I was talking to some really good friends, Steve Moore, which was an advisor to Trump, Mark Mills, Steve Forbes, and on the cruise, and we were talking. They did not signal my belief, but I think the whole reason that you're seeing these job cuts is to pay that minimum 15% tax that these companies haven't been paying.
Hmm.
So, I mean, how much do we lose in payroll tax if that's the case? I
Yeah.
mean,
Right.
you got companies like Amazon they say have never paid taxes before. So if their revenue is 20 billion and they have to pay 15%, I don't know. I mean, geez, that's gonna. I mean, even according to government numbers, they're expecting to have 700 or 800 billion dollars going to the coffers from this tax. I don't know.
Well,
But that's another subject. But my point is that uh, I think that the job cuts are going to be in these companies making over $1 billion in revenue.
hmm. Yeah. Well, yeah, and it's interesting because so there are three or so that I'm thinking of: Microsoft, Amazon, and Google, and they got two main areas um, in the near future. The first one is AI, which um, Zuckerberg and Facebook are trying to get their metaverse or whatever. Um, Google is late to the party because more they're less risk they're risk adverse. They're not they're a bigger company. They don't want to damage their reputation. Um, and the second thing is cloud services, which you have Microsoft, Amazon, and Google. Um, the cloud has been here for a while. It's just providing the service that they're focused on. So I think those are the two main things that you need to watch for those three. Um, and like I mentioned with AI, is Google, like the old IBM, too big to kind of position itself into new arenas rather quickly. So yeah, and you mentioned let me share Google. So here's the 3 months chart of Google. Their 20 SMA is sitting down at 91.93. So $8. So that's 9%, a 9% drop. And they did have a red candle today. So it'll be interesting
Yeah,
to see.
so just transparent on that. I am um, in that trade. So, and eventually going further, I'm going to share some of my trades through FTM Messenger and stuff. But I've been working on uh, with Brian on this website and some other things, and we got a lot of good things coming up in the future. You're gonna like the app. We're I'm gonna show you how I use these apps. What I I even the Raytheon, how I got into the Raytheon trade is that the app showed me how many calls were going into Raytheon. I mean, it's a beautiful thing that the earnings app I I think is good for earnings, but I find it much better because it's telling me real time who's jumping into the call position. When I see 17 times the amount of calls coming in puts into a stock, you're in. I mean, that's just the way it goes.
Right. Yeah.
So, and so what I've been doing is utilizing that. But with that said, that it's we're just it's going to be for the benefit of our members, and you're going to really like it. But
Yeah.
um, yeah, it's. I mean, when you hear the stuff going on in Ukraine and they talking tanks, talking this, talking that.
Oh, yeah.
I mean, the thing is that the news is what drives the markets. I'll never forget the many conversations I had on the floor, and I would say, um, why do you have that on your screen? You know, because what happens a lot of the floor is not what you think it is. The floor is made up of like 50 companies all doing their own thing, and that they're actually just handling the orders on the floor. So you could be talking to someone from night, um, trading or whatever, and then on the other side of the room, it's another trading company. But they all would go ahead and have their algorithms pointing to news, and I'm like, well, geez, I wouldn't even thought that, just I mean, at first, having conversations. And what it is they found that anything that's mentioned in the news has a greater effect on the market than anything else. And I even had $1 million traders that um, they actually traded just what they saw that came on CNBC. So I wouldn't have believed it if I didn't trade with them. I'm like, are you freaking kidding me? You don't look at charts, graphs, you don't care about nothing. You go ahead and John and Damon's coming on from Chase Bank, and you're buying call options, and he's like, yeah, and then as soon as he stops talking, I sell.
Right. Well, yeah, why do the CEOs come on? I mean, they need to pump their stocks.
Yeah,
They need to promote their businesses. So, you
yeah,
know,
and it's funny, but the stock usually does go up when I watch it. So it's a funny thing. I mean, and I'm sure it works the other way when they have bad earnings. The more the guy talks, it seems like it goes
trying to make
down. But
excuses. Well, because yeah, so like I said, I was watching CNBC this morning, and the CEO of Raytheon was on, and he's like, even though you see in the U.S. they want budget cuts, they limit the spending on the U.S. defense. He's like, I have all of our allies saying we need more. We need more Patriot missiles. We need more, weapons kind of things. They're constantly asking for more and more and more. So part of him was selling. Yeah, we can't fill the demand for how many weapons that they want. So yeah, like I said, it's the news. It's, he's saying that even though you may think if you're thinking just US, that sure they're going to pare down, but that's not the case around the world. So yeah, I would be bullish on defense. So
well, just so you know, in our meeting, that I had 5 days of meetings. while we were during the day, and it's you Google it, it's not the case. Whatever you hear, the Democrats aren't cutting the defense budget; it's actually increased. They don't have a choice. And part of the discussion, which I was really surprised on, is that they were saying that there's a couple camps in the Republican side that says that we've gone just too crazy. We're outspending everybody in the world. Maybe it's time to cut it back. And so,
Mm.
but the only reason I say that is that at this point where we're at, to replenish all the military equipment that was lost in Ukraine, I mean, there's not many companies that was said, in the meetings. They're like, there's not anybody that can make these things. What Raytheon can do, nobody else can do.
Right.
It takes 10, 15 years to scale. And we're using up all our equipment, and it needs to be replenished. And even at this point, we can't get it replenished quick enough to get to where we need to be. So
Right. Right. Exactly. Yeah. Well, I think we're gonna cut it here. It's funny because
excellent.
Alan mentioned all the tasks that him and I are working on. I think what I'm gonna do is come spend a weekend in Michigan and buckle down and be like, okay, drag my computer down there, be like, okay, we're doing this, and it'll be our work weekend thing. So
Yeah, well, that sounds like a lot of fun.
yeah, have to coordinate that. Get the okay from
Well,
Donna.
we'll have to get some of that Hampstead beer, whatever that was.
Oh yeah, Hofbrau. Right there, yeah.
Yeah,
Yeah,
that was fun.
exactly. So,
Yeah,
okie doke.
sounds good.
Okay, well, you guys have a good rest of the week. Hopefully you guys are doing well. Reach out, subscribe, comment on my channel. I hope you guys get a lot out of this. So thank you very much for watching. So bye everyone.
All right, we'll see ya.